Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Tuesday, October 27, 2020. Wow. We've entered a different phase. We've gone into the risk-off phase. The combination of the election, 6 days away now from tomorrow. We are in the phase of COVID surging almost out of control everywhere. I know you're going to say, what is he talking about? Well, France is considering a nationwide shutdown. We may hear that that's going to happen on Thursday. Italy, Spain, the UK are right behind them. Germany's having its problems. I live in Chicago. At about 3 this afternoon, they issued a new edict that all restaurants in the city of Chicago will close as of Friday for dine-in, which means, forget it, you can eat outside. I live in Chicago. It's 35 degrees at night now. Restaurants in Chicago are not built for outdoor cafe dining. They are built that when we get under 60 degrees, you don't want to really sit outside. Problem. And we have snow coming, and we are getting small amounts of that. So effectively, you have, well, in an effective manner, they have shut down the restaurant industry. Right behind it will be the barbers, it'll be the workout gyms, everything. As much as the city doesn't want to do it, it is getting out of control and doing it quick. 2/3 of the beds in Paris, intensive care, are taken. Texas, you're reaching that right now. I'm not trying to scare you, I'm telling you what's going on. You put that combination with no relief bill that happened out of Congress, the election in front of you, do you honestly think it's a risk-on environment? That's my point. We knew this was going to happen to a degree. We knew it was going to get volatile, and it is. So when I take a look at the tech sector, for example, a lot of people are saying it's had its day. Mr. Einhorn said it's a bubble ready to burst today. I don't know. I know that the market made a top here, and the market has been making, in the longer term, a retracement. And the short term, it most certainly has a pattern of lower highs, lower lows. That is a downtrend. I filter that by looking to see where markets are trading within range of moving averages. This market got under about 4 days ago, the 18-day average of closes, and it's staying under it. I define bias on a daily basis by the 18-day average of closes. When you're under it, I have a bearish bias. When you're over it, I have a bullish bias. I next do the same thing on weeklies. Under it, bearish, over it, bullish. It filters the swing line. By my definition, you're in a downtrend. Lower highs, lower lows, bias down. Potential support, looking at moving averages, could be the 100-day, under that the 200. But I always look to see where the Bollinger Band is in relation to it. It's made up of a top band and a lower band. It's an algorithm designed to keep the market trading within the bands 95% of the time. If you think algorithm traders don't look at it, and guys like me that have been around this game a long time don't look at it, we do. And we look at it because we know other people are looking at it. That's what makes an indicator so neat, if you can figure out what other people are doing with it. The lower band came in. Today's low is 114.43 on Monday. I said that wrong. On Monday, you bounced today away from that, so you missed it by 3. And I said I thought the pros would take something off the table, but they may get to hit it again tomorrow. The point is, you rarely stay above or under the band. That is not a signal to get bullish or bearish. I know you're going to tell me it certainly is, Ira. Look, I went short here. Yeah? And where'd you get out? It's a trend following idea. There's ways to ride the band. One of the ways is, how do you tie together momentum with it? And that's what I do in my subscription service. In my subscription service, I tell clients when to stay with the band that's going to ride it a bit, and when to come not only out, but reverse course, possibly getting short in these areas, looking to get back to that 18-day average of closes. This is a market that is just oversold. Any reading under 30 in either part, and it'll generally be the red part first, the slow stochastic get you into oversold. Any reading above 70 is overbought. So I have the parameters. I teach that in my charting course. I see an oversold market that's coming into a support level that begins at the lower Bollinger Band down to the 100-day average in front of a COVID outbreak and a presidential election. I'll let you do the rest of that. When I look at SMH, oversold in a downtrend. The downtrend got confirmed yesterday. That was the first close we had under the 18-day average. That puts finally into play the lower Bollinger Band target. We'll see if I'm right or wrong that that target could be hit. We'll find out. XLI, what number did you go down to and run into the brick wall? I don't make this up. I'm not creating the day's highs and lows. What created the highs here? I mean, you start looking at these patterns, and that's what you're doing. It's called taking off some money at objectives if you're short, taking off some money out of the table if you're long on the upside, and understanding what the trend is. You're doing your best to do it. What I've learned over the years is throw the name of the chart away. Trade the pattern. I like to know the name of the chart because I'm like you. I want to know what the fundamentals are. Does it make any sense? Blah, blah, blah. But at the end of the day, what am I basing my analysis on? Chart action. It's a roadmap. Am I going to make wrong turns? Guarantee. Is your GPS going to be out of date at some point? Probably is. If you've got one that still reads the old discs. If you've got the newer ones, most likely not if people put in where the detours are. If they don't do it, your map is wrong, and you will find wrong scenarios. You'll also get into scenarios where they haven't laid out roads on it, right? I've done that. XLE, higher high, lower low, absolutely no trend. Now, the API numbers came out this afternoon. They're disgusting. I think it was 10 or 11 million barrels billed. Okay, so I'm talking gasoline, distillates, and the crude. That's a monster number. They're not looking for anything like that. The EIA report, my subscribers see what I'm putting out. That's not the trader's guess, so this is a bearish number. Be careful of that one. QQQ. You've done a roll on the market. Now, all of a sudden, with that rollover, you're hearing that people are coming out saying tech stocks are overdone. Mr. Einhorn came out today saying it's a bubble. It's probably burst already, past tense. He might be right. My problem is I don't know that I buy into it because if COVID cases are getting worse, I'm still going to buy from Amazon. I'm still going to be using all those tech things. I'm not going back to the office. I'm not giving up my Netflix. You get what I'm saying? Get us out of COVID. He's probably right, but I think the timing of it is where are we on the COVID? In any case, if you take out the high of yesterday is the key. You had an outside day down, 285.30. So if it's not taken out right away, the path of least resistance is back down to here. We'll see if that happens or not. By the way, if you look tonight, you saw Microsoft's numbers right through the roof. They look fabulous, okay? The cloud's supporting them. Emerging markets, bang. Wasn't this the granddaddy trade that people were talking about? My point is, and I know a lot of traders say, I want to be in long term. Then don't look at a daily chart, just look at a weekly chart. If you're looking at a weekly chart, a daily chart, why are you talking long term? Each day should stand on its own to make a formation. This market, simply put, got bearish. You had lower highs. Now if you close under the 18-day average, you did, and away you go to the downside. Okay, that doesn't mean you have to go to the downside, but that's the point. I get so many people, oh, I want this, I want that. When the market drops during the day, 1,000 points in the Dow, and you're on a weekly chart, and that's what you're basing it on, why are you worried about it? What's your weekly chart say? That's not what human nature is about. Gold. Interesting here. Gold is down $5 in the futures tonight. Yet, on this market, it gave you the first mini buy signal. Now, what have I told you when you get into these sideways action events? I call them a pipe. Unfortunately, in pipes, you get many false starts up and down. It's the most frustrating way to trade I know of. How do I know it? I used to sit at my desk throwing pens at the wall, everything else in total frustration until I learned the hard way what is a pipe. And I said, you know, that's the springboard that creates either an uptrend or a downtrend, but in between, that's where you get chopped up. This is the Chop City part. The gold miners, well, they're still in a downtrend. Lower highs, lower lows. I am concerned about something, a crossover. The 18-day average is getting ready to get underneath the 100-day if we get a good down here. And that's a lot of resistance, and trend followers of moving averages will pay note of it. It's a warning sign. TLT. Regular viewers of watching this know that the one thing that I'll say over and over, the first challenge of a Bollinger Band, upside or downside, is where I think pros take money off the table. Now, I am assuming that when you're over the 18-day average, you have a bullish bias. Whatever your technique, you have a bullish bias. That's what I believe in my technique. When you're under it, you have a bearish one. So, the first challenge of a Bollinger Band, wherever it comes in, is often a zone the market tries to hold. Here you're coming down, you get to it. Where's the resistance on this chart if you get a bounce? The combination of the 18 and the 200-day average, and that's right where you're at. Okay, are we trending anymore? Nope, you weren't trending anyways. You're just hanging right here. Euro currency. You have the swing line down, the bias up because you're over the 18-day average, so they fight each other, you have nothing, and momentum pointing down. I put it all together, try to come up with ideas, and that's what I do in the afternoon for you. In fact, I do this in two different ways, to be honest. At about 3:30 in the afternoon, I typically record a video that covers right now about 37 charts on just spiders and ETFs. I try to cover everything my clients possibly want. I look at different ETFs all the time, which ones are getting more popular than others, and I'll move them in for you. But it's the trade ideas. And I'll often tell you, you want to know before you make any of the trades that I come up with, are you getting a nutty move overnight in the futures? I have a combo where traders take this and then they get at 5:40 in the morning, well before the stock market's opening, what I'm seeing in the futures, and you tie the two together and it's a whole game plan. But this is what I'm trying to cover for you, and I'm always adding to it. So I'm covering these individual ones. It's most of what you want. If people write me and they're a subscriber, I try to add it for them and give them exactly what they're looking for, where they're looking for it. And the goal here, well, try to give you a trading plan that you can work with. Not from me, from you. Do you understand what I'm getting at before I go any further? I'm assuming you have some of your own ideas. What is Ira thinking of that? That's where it gets answered. I get people that write me. Go away with it. First 30 days, $8.95. You can write me. I do respond to people, by the way. You can call. I talk to people. I don't hide behind anything. I can't spend my whole day writing back and talking because I do a tremendous amount of research and I publish these all day long. But to find out or sign up for it, what do you got to lose? $8.95? A Starbucks coffee, a big one, with a tip? Yeah, that's what it is. 30 days of this. Give it a try. Go to our website under the word research. It's all there. I'm Ira. You have a good day. Be careful. This is now a risk-off market. Take care.